Phase 1. The solution. Immediate action. While the market is bleeding red, and everyone on Twitter is screaming sell, I am doing the exact opposite. I am hitting the buy button. Right now, today. I am not guessing. I am executing the panic protocol. I have already deployed 25% of my cash into 3 specific AI infrastructure assets that are currently trading at a 40% discount. Why am I so confident? Because while you are staring at the red candles, I am looking at the smart money data on the blockchain. The Trump family just sold a massive stake to the UAE. The whales are moving $700 million in stablecoins into the market. Not out of it. The retail exodus that the news talks about is actually the signal we have been waiting for. In this video, I am not going to tell you to panic. I'm going to give you my exact buy list. I am going to teach you how to use professional forensic tools, like Dropstab, to find the gems that Wall Street is trying to hide from you. The crash is fake. The opportunity is real. Let's get to work. Phase 2. Forensic diagnosis. Funding rates. Now, before I give you the tickers, we need to act like engineers. We need to understand the mechanics of why the price dropped $10,000. If you don't understand the crash, you will buy too early. Look at this chart. This is the funding rate for the last month. This rate was positive. That means traders were paying high fees to be long Bitcoin. They were greedy. They were over-leveraged. When the funding rate gets too high, the market makers must crash the price to flush out the gamblers. That is what just happened. This drop to 78K was not caused by selling. It was a liquidation cascade. Billions of dollars in long positions were wiped out in seconds. But look at the rate now. It has reset. It is neutral. The leverage is gone. The market is clean. This confirms that the bottom is not zero. The bottom is right here. We are standing on the floor. Financial centers on Earth buy into a crypto project during a crash because they know what is coming. They are securing their position at the bottom. They are entering through the back door while the public runs out the front door. This is a transfer of wealth. The retail exodus is real, but it is a donation to the institutions. We are forensic investors. We follow the UAE, not the panic sellers. Phase 3, the geopolitical signal. UAE and Trump. Now, let's zoom out. Let's look at the players who move the real money. While the retail investors are crashing, Coinbase trying to sell $500 of crypto. Look at what the elite are doing. I found a report from the Washington Post that is the key to this entire puzzle. The Trump family crypto firm just sold a major stake to a UAE investment firm. Pause and think about the timing. Why would the United Arab Emirates, one of the smartest, richest financial centers on Earth, buy into a crypto project during a crash? Because they know what is coming. They are securing their position at the bottom. They are entering through the back door while the public runs out the front door. This is a transfer of wealth. The retail exodus is real, but it is a donation to the institutions. We are forensic investors. We follow the UAE, not the panic sellers. Phase 4, the sector. Why AI infrastructure? So, where is the smart money going? It is not going into Bitcoin right now. Bitcoin is just the index. The money is flowing into artificial intelligence infrastructure. Here is the thesis. The panic about DeepSeek, the Chinese AI, crashed the tech stocks. But this fear is irrational. Whether Chinese AI wins, or American AI wins, or OpenAI wins, they all have one problem. They are starving for compute power. They need GPUs. They need data storage. They need bandwidth. We are investing in the shovels of the gold rush. Projects like Render, like Akash, like Fetch AI. These are the railroads of the future economy. And thanks to this panic, these railroads are trading at prices we haven't seen since November. This is not a risky bet. This is buying the infrastructure of the next decade at a discount. Phase 5, the tool, advanced Dropstab tutorial. Now, stop using CoinMarketCap. That is for tourists. Here is the practical solution. Open a tab and go to Dropstab. I am going to show you how to filter for the winners. Step 1, select the AI sector. Step 2, go to filters and turn on vesting. This is critical. You want to find projects where the next unlock is far away. If a project is unlocking millions of tokens next week, do not buy it. The VCs will dump on you. We want clean vesting. Step 3, look at GitHub commits. I want you to find projects where the price line is going down, but the developer activity bars are staying high. This is called a bullish divergence. It means the engineers are working harder than ever, even though the market is scared. This is exactly how you find a 100x gem before the YouTubers talk about it. Phase 6, the strategy and outro. Finally, here is the execution plan. Do not go all in today. Now, before you click buy, there is one final boss we must defeat. The news is circulating a report from Michael Burry, the man who predicted the 2008 crash. He warns that a Bitcoin sell-off could trigger a death spiral. He says if Bitcoin drops another 10%, companies like MicroStrategy will be insolvent, and the capital markets will close on them. It sounds terrifying, right? But let's do the math. Let's look at the forensic reality of MicroStrategy's balance sheet. Burry says they are in danger. The data says their average purchase price is roughly $76,000. They are not billions in the red. They are at break-even. And here is the critical engineering detail Burry ignores. MicroStrategy does not have a liquidation price, like a degenerate gambler on Binance. They own the coins. They have long-term debt structures. Nobody can force Michael Saylor to sell. This death spiral is a ghost story designed to scare you out of your position. And Burry claims adoption is not enough. Really? Look at the on-chain flows from last week. While the price was crashing, BlackRock's IBIT and Fidelity saw hundreds of millions in net inflows. The price went down, but the institutional wallets got fatter. That is not a death spiral. That is an accumulation phase, when the most famous bear in the world comes out to scare you at the exact level where institutions are buying. That is not a warning. That is a bear trap. We respect Michael Burry's history, but today, we respect the data more. Don't let the headlines shake you out. We use dynamic dollar cost averaging. I am deploying 25% of my available cash right now. If Bitcoin drops another $5,000, I deploy another 25%. This removes the fear. When you have a plan, you actually hope it drops more, so you can buy cheaper. The 10K drop is scary. I get it. But ask yourself, do you want to be comfortable? Or do you want to be profitable? The UAE is buying. I am buying. Subscribe to Digital Asset Lab. We don't panic. We engineer profits. See you on the charts.